Good evening, welcome to Share Shootout. I'm Bruce Whitfield. Tonight in the firing line, we've got Sasha Narishkin from Vestact, one of the very first guests ever. There he waves, just in case it's a wave goodbye, because of course Sasha was shot out on his first ever visit. Plus Warren Jeffrey, a first-timer from FSP Invest. Our guests have each pre-picked 3 shares. Their rival has got absolutely no idea what they hold, but at some point during proceedings, they must accept at least one of their competitor stocks. The longer they leave it, the more likely they are to have to accept something they really don't like. Each has 30 seconds to argue their stock pick. We then interrogate their choice, which either gets shot down or accepted. And the least convincing stock picker is banished. That is how Share Shootout is won on arguably the most vicious stock picking show on television. Let the Share Shootout begin. Because you've been here before, Sasha, we're going to make you go first. And I look at your picks and I think you are an extraordinarily courageous man, because you've got 3 very brave picks. Let's start at the top with probably one of the most vigorously traded industrial shares on the JSE. In the food space, it's not Pioneer, it's the one that's run even harder, Tiger Brands. Why?
You say run hard, but this is for a reason, Bruce. If you look at operating margins of Tiger Brands, and this is how I'm going to put it to you, because I compare these companies globally. So I say, as a global investor, where are your choices? So their operating margins are better than Mondelez, which of course is that Kraft's international foods business, better than PepsiCo, and comparable to General Mills. Now, why I find that laughable is because their growth rates outside of South Africa are said to be where all the action is. And if you needed reminding, in Nigeria, their population is growing 2 to 3% per annum, which, as far as I understand it, is more than the entire of Western Europe produces in a year. So
okay, 30 seconds are up. Okay, he's just got into it. He's like a padre, one of these evangelical padres who's trying to speak to an audience, but he's very convincing, isn't he? But is he convincing enough for you, Warren?
I think he's got a good case with Tiger, but it's not going to be my share pick, or I'm not going to back you on it, simply because Tiger's got very involved with Dangote Flour and all of them in Nigeria.
Great move.
But it's a great long-term move, but the problem is the growth they're receiving from that. Things are happening slower than what they're originally looking for. So although I think it is a good move, I don't think it's going to reward investors in the near term.
Now we look at it, we look at it, Sasha, we've got to say to ourselves, hold on a second, here's Tiger Brands, which is going around the African continent buying growth. That's the way it's got to do it. You can't go in there organically, take in your own brands. Nobody knows what Koo is, nobody knows Black Cat peanut butter, nobody knows Beacon Sweets outside of South Africa, much further than perhaps Zambia, where these things might get to on a regular basis. So Tiger Brands has got to go in and buy growth. It's competing against international food producers to buy assets in these continents, like Nestle. However, does that not mean, as in the banking sector, that it's overpaying for assets on this continent?
Nestle Nigeria trades on a 30+ multiple. And here we've got Tiger Brands trading on a multiple forward of about 16.5 with a yield of about 3%. That's enough for me to be able to say, at these prices, it's much better priced than any of the alternatives on the African continent. So if you're a believer, as many of the viewers on this channel are, in the long-term growth prospects for this continent, you want to be involved in the food space.
How long do I have to wait, however, for Tiger Brands to give me
Bruce,
that?
as an investor, and separate this trading, grand turnover, you have to wait at least 10 years. Now, you might think 10 years is a long time. And I think we've been married longer than 10 years.
Not us, personally, together.
Not us together, but
individually, we've been married to our spouses, yes.
And it feels like a long time, but investing is a long-term commitment.
All right, okay. Like marriage, he's even wearing his wedding shoes. I wish we could get a camera down to those wedding shoes. He only has one pair. Okay, well,
wedding shoes.
We like Tiger Brands. It's a good company,
yes.
But good companies don't necessarily give us a decent return over even the next 5 years.
Well,
that's the thing. I look at a 5-year investment term horizon, not a trading return. He's asking me to wait 10 years. I don't have 10 years to wait. Do you?
I definitely don't have 10 years to wait, and the problem is in the time that you're waiting for those 10 years, you might be sacrificing better opportunities. So it's not that it's a bad investment.
If you were in the food sector and I forced you to buy anything within the food sector, what would you choose in the South African landscape right now in the food sector if it wasn't Tiger Brands?
Geez, if it wasn't Tiger Brands, it's a good question. I don't think the food sector is looking great right now.
Okay, so you you check out the whole food sector.
I'd pretty much avoid it. I think their input costs are uncontrollable at the moment, and they're going to have knock-on repercussions.
Okay, Sasha, I'm afraid you've been shot down on that one, but don't cry. There's still 2 to go, and they're even more courageous than the first one. Warren, your first pick this evening, Octodec.
Yes.
Tell me what it does, and tell me in 30 seconds why we should be buying it.
Okay, at FSB, I'm the editor for South African Investor, and we've got 2 major drivers for any investments we make, or right now we have those 2 drivers. Those are emerging consumer growth and rapid stimulus around the world. So in terms of Octodec, it's a property company, it's property loan stock, it's one of the smaller players in the market, but it's actually focusing on the urban renewal development areas. So this company is going out, buying properties in cheaper areas which are previously have been neglected. It's then developing these areas, and as it develops them, it then increases the value of the property.
30 seconds are up. But here we've got a situation where does it go into like downtown Johannesburg or does it go down to downtown Polokwane? Where does it invest?
It's actually got quite a broad mix. It's generally sticking to the major urban centres, so it's going more for your Johannesburg, your Pretoria, that type of thing. So your Newtown, that's where they're focusing their growth. And the advantage is you buy it for cheap, costs you almost nothing if it's vacant because you've got the property for so cheap. Once you've developed it, you put tenants in and they're getting more than 10% yields on their...
I know lots of people who fell for the trick, Sasha, of buying apartments in Newtown and are sitting on an asset where if they've got a tenant, they're struggling to get the tenant out because they haven't been paying the rent. Is Octodec one that you would want to put into a portfolio?
Generally, when we're putting together portfolios for private individuals, most of them have property exposure. So often these investments are generally for institutional money. So that's where you've seen very strong flows because we're probably in a very low rate environment. So people are searching for yield. I'm worried when that unwinds, whether people will say, and at the time that will unwind, that means fixed income's ticking higher, which means interest rates are going higher, which means their ability to be able to service debt on those facilities is becoming more and more strained.
Sure.
So that's why I think the sector is more than well priced, and it's probably just a general comment because I don't know enough about the company.
Okay, but in terms of a general comment, and we'll come to some more specifics in just a second, we have got an environment where inflation has come out recently at 5.4%, a surprisingly low number with the reweighted inflation basket that's come out. It seems to reinforce the perspective that for at least the rest of this year, even interest rates are going to stay flat. If not, be under pressure to come down. That's good for the property sector, which has been the outperformer for the last 5 years. It could continue. The property sector could continue.
Of course it could, but bear in mind also that if your tenants are government tenants, and we know government is under increasing pressure for revenue, they won't become as reliable a tenant, I suspect, as they were in the past.
Octodec, give us one last thing before he shoots you down because he's going to do it on principle.
Just in terms of the government, Octodec, 55% of revenue is coming from retail. They've also not just dependent on the on the urbanisation areas. They've also got Killarney Mall, the Woodmead Value Mart. They've actually expanded into their retail offering. So.
Okay. Sasha, on a broad principle, you don't know the company well enough to give a judgment on the company itself.
But I'll make a point about retail there. The future of retail is not in mall space.
Yes, you missed a 20-year view. I'm telling you, Sasha, the future of retail in America might not be mall space in the next 10 years, but surely in the African context, the South African context, we'll be schlepping around to the shops in our slops for at least the next 20 years.
I'll be sitting at home ordering my stuff online, Bruce.
Okay, good luck with the deliveries. Octodec, do you shoot it down or do you accept it?
Well, I don't know what the other 2 are, but I'm going to go with this one because I suspect it's a better quality.
Okay, so you're accepting this one?
I accept this one because just in the short term, I think you're probably going to be right. And I don't know what the other 2 are, and I'm wary of probably what the other 2 are. So I'm going to go with this one.
I think you're going to be quite relieved, actually, that you went for that one. So there we go, Warren. You've got Octodec accepted. It's a 2 billion rand property loan stock. It's on a share price of about 20 rand. It trades at a multiple of 14 times. The yield on it is sitting at about 7%.
That's right.
It's a great yielding stock, and that's why you would go with Octodec in the whole property landscape, choosing one of the smaller players. courageous, and you've accepted it. Okay, Sasha, you're playing the game in an interesting way. You are a bit of an athlete, or at least you have something of an athletic past. You know sport, you know sports equipment world, you know a difference between a hockey stick and a golf club, which is one of the reasons I suspect you've gone for hold sport.
Well, golf I don't play, and hockey I only ever played once, was more dangerous than rugby. But let me give it to you this way quickly. Hold sport, so a much smaller player. They got 2 performance brands in the form of First Ascent and Cape Storm, 34 Sportsman's Warehouse, 18 outdoor warehouses. Now, as you quite rightfully point out, it's a fast-growing sports culture in South Africa. The August is the single biggest bicycle race globally. The Comrades is the single biggest ultra marathon globally, and the Midmar Mile is the single biggest swimming race globally. The stock is priced really well, 10.7 times forward, well run. It's perhaps the only overhang is it's got some private equity types who might be wanting to exit, but on a 4.7% yield forward in the retail space, has to be attractive.
Okay, there we are, 30 seconds are up. But how many riders in the Argus would go and buy their bicycle from Sportsman's Warehouse? Let's be honest about this. Do they deal with the upper end Scott bicycles and other big brands?
Well, I'm glad you said that, because at Four Ways Crossing, which is my neck of the woods, I know it's not yours, the Sportsman's Warehouse has just expanded their bicycle offering and bought the retail space next door. So it's the single biggest portion of there, and it's obviously to be able to cater to demand. And I went on a Sunday afternoon to get my daughter's bicycle fixed, and I stood in a queue of about 10 people. So
customer service sucks.
No, it didn't. It was quick. There was just a lot of people there.
Okay, Hold Sport. It's an interesting pick, Warren. Would you go with Hold Sport? It came to the market at what, $40?
No, actually 31, and that
31
was
bucks, okay.
July 2011. Peaked at 50, trading in the region of 42.
44 at the moment. Okay, Warren.
Look, I mean, judging by my shopping on the weekends, definitely Sportsman's Warehouse. It's got consumers coming in. I think my big question mark over it would be the introduction of international companies, your Massmarts and things like that. For me, it's a question it's just a question of time, how long they let the smaller players get involved.
Because
before
Mr. Price has got Mr. Price Sport, for example. Now, is there an environment in which competitors can come in, Sasha, and cut Hold Sport down at the knees?
Oh, I'm glad you said that, because remember, Massmart actually tried to buy this business, I think in 05 or 06, but the Competitions Authority flew up a red flag and said, sorry about that, pal. Yeah. So it's happened before, and that was with a different set of shareholders, and that's interestingly why they came to the market, is because they're probably looking to maximize value. And management are pretty entrenched there. I just think they got some quality brands. It's growing really quickly. The cyclicality of events like the AFCON and the World Cup, that's going to impact, so earnings are not going to be smooth, but I'd rather go for lumpy higher returns than smooth lower returns.
I mean, my one concern would be in an environment where we've got a very strong sporting culture, but sport isn't as entrenched in schools as it should be, and I don't see government really driving sport in schools. That would be, to my mind, a great reason to buy a Hold Sport, because you were forced at school to have cricket kit, to have rugby kit, and to have a pair of Speedos every time you went to go and do the Midmar Mile, which is why I don't do the Midmar Mile, incidentally.
For everyone else.
I think of other people when I consider my sporting options. My concern here is there'll be a great growth market, but it doesn't have that sort of momentum behind it to drive sales.
Look, I think without branching out and going into competition with the likes of a Game or someone like that, they have a limited market. And even from an affordability market, yes, sport is a big thing in our country and we are developing it, but the majority of our population can't afford to pop into Sportsman's Warehouse and buy.
So do you accept it or do you shoot it down?
I'm afraid I'm going to shoot that down.
Okay, you're shooting down Hold Sport. Very courageous, because that means you have to pick Sasha's third share, and it's a tougher one to pick than most because it's pretty pricey. Okay, so Sasha, you get shot down on 2 fronts, but that's okay. You're a big man, you can take it. You've been through this before. You know what it's like to lose this game. MMI Holdings, come on. You could do better than that.
Well, I like MMI Holdings. Like I said, I'm speaking from 2 big drivers in the market right now. You've got the consumer growth and you've got rapid stimulation of markets. MMI profits from both. Firstly, it's a combination between Momentum and Metropolitan. Metropolitan's targeting the entry level or the lower end consumer, and then it's offering options to insure them. It's moving up through Africa. This is bringing in increases in actual premiums brought in. Then you've got stimulus coming from the world as a whole, which is driving our markets and pretty much markets around the world higher and higher. Now, as an insurance company, MMI is sitting on a load of cash which it's investing. I mean, if you just look at what's happened in the last 6 months in the market, MMI, I expect, is going to have much better returns on interest.
30 seconds are up. Okay, an insurance company. They're incredibly dull, Sasha, but before you shoot down, consider the performance of the insurance companies. They've done very well, all of them, whether it be MMI, whether it be Sanlam, whether it be Liberty, whether it be Old Mutual. Old Mutual's been a stellar performer. Lots of fixing going on in the process, but they're selling Puelisa, they're selling product, and the underlying assets are growing with the market. And in a long-term bull run, this has got to be a positive pick.
Yeah, there are a few grudge purchases in life, and one of them, of course, is short-term insurance. Life insurance, not so much.
Okay.
But I think medical insurance in this country, if you can afford it, so, you know, we've had middle-income houses grow to the tune of 3.5 million over a couple of decades. So, you know, those are all people who are participating in potential clients. In terms of brand awareness, the best one in this country by far and away, and you probably couldn't pick it, was Discovery.
Yeah.
Now, there's a company that I think is going to make inroads into market share. And I think, you know, after having done quite a lot of reorganization in MMI, I'm not too sure where that is and whether or not we'll see the fruits in the short term. I think that comment about yours about being boring is probably a little unfounded. And let me explain, because the pot that you were talking about that you have to hold as collateral, that trades up and down with the market. So essentially it's a geared play to the market. So your earnings can be very volatile. And as an investor, someone who likes 10 years, Bruce, I don't like to see volatility in earnings.
Okay, but then surely if I'm going to be buying a proxy for the market, I go and buy Satrix 40. I don't buy MMI.
Yes,
Okay, so you're shooting it down.
I have to.
Okay, not that I'm trying to lead the witness here. You understand this. Okay, but what you've survived so far, Warren, is that your Octodec pick has survived the test of time so far, but you've been shot down on MMI Holdings, the 36 billion rand life insurance company, the merger between Metropolitan and Momentum. Of course, it's the newest entry into the insurance space and is now the number 3 insurer in South Africa, behind Old Mutual and Sanlam. Sasha Narishkin from Vestac been shot down on his 2 picks so far this evening. He's been obliterated. Warren's taken out the bazooka and has eliminated both Tiger Brands and Hold Sport. I understand his elimination of Hold Sport. I'm a little wary of the logic behind Tiger Brands. Sure, it's expensive. It's on a multiple of 18. But if you buy Sasha's argument that the African continent is the place to go for the next 10 to 20 years, surely Tiger Brands has got to be a core holding. But at what level do you buy it? I suppose that's the big argument. Time for us to shoot off for an ad break. More share shootout on the other side of this. Welcome back to Share Shootout with me, Bruce Whitfield, on CNBC Africa, first in business worldwide. There's a lot to play for this evening. Before the break, Warren and Sasha gave us 2 of their share picks. The very brave Sasha Narishkin from Vestac chose Tiger Brands, the nearly 60 billion rand food manufacturer that's operating in an environment where food inflation threatens to rise. That is why Warren shot it down. Not too many questions asked on that front. Hold Sport, we're all athletic on this show, so we understand the benefits of earning. Don't start that, Sasha Narishkin. No guffawying, you get gonged out for that. But Hold Sport is in a unique position. It's mass market, wholesale sporting equipment sales. Families like to hang out there on weekends, and as my children get older, I think I will understand the Hold Sport benefit more than ever. But for the time being, however, Warren looks at Hold Sport and says it doesn't have the necessary unique proposition that is going to withstand any kind of assault from a mass mart, which is bound at some point to launch a very full frontal attack, Walmart style, on Hold Sport. So Hold Sport got shot down as well, which takes us to Warren and Warren's picks this evening. And Warren has gone for Octodec. It's a property play. It's in the sort of urban, the rougher side of the urban space, where it goes in and refreshes tired buildings, and it's got a big retail component to it. Sasha reluctantly, I think, picked this one, mostly because we believe that interest rates will stay flat for the year and that this will continue to be a nice high-yielding investment. So on that basis, Octodec, got the thumbs up from Sasha because he didn't want to have to pick Warren's number 3, I tell you that much. Then MMI Holdings, although we see insurance companies as being fairly dull, MMI Holdings is an interesting pick, and it is one that sort of mirrors what's going on in the underlying market. Of course, it sits on a huge amount of capital which it invests on behalf of its policyholders and its investors. But is that enough to entice Sasha? No, it isn't. Sasha would rather see an index product if you're going to do that rather than run the risk of being exposed to an insurance company. So, to pick the winner, I need some very compelling arguments. And in this part of the program, Warren Jeffrey, you go first with your final pick of Invicta. Why?
Well, I think Invicta has a lot going for it. The price is high, but the price is what you pay, value is what you get. Now, Invicta, I like what management's doing. They've gone on an acquisition trail. They're looking to expand into emerging markets. Like I said earlier, that's what I believe are the drivers in our market now. Same as you were talking, the expansion into Africa, I think there's a lot of opportunity there. Their recent purchases have given them an avenue into China and a lot of the emerging market worlds. And they've also purchased distribution rights for Hyundai heavy machinery into Africa. And that combined with Invicta's stellar performance and great in terms of dividend yield and increases in dividends to date.
A dividend yield of under 3%. I wouldn't call it great, but okay. But you're 30
in
seconds.
relation,
You're 30 seconds around. I love this game where I get to have the final word. Sasha, Invicta, Africa story, Barlow World. Come on, you can. Why would you go for Invicta?
My wife drives a Honda, and in fact, one of my first cars was a Honda. So
some of your best friends drive Hondas.
So
Yes.
I don't have friends. Really.
Yes. Oh, this is true. But because you drive a Hyundai. No, but this is Hyundai heavy equipment. This isn't the agency for the motor cars. So
Correct.
unless your wife
Correct.
is driving a bulldozer around to push you around, I doubt very much that it's this particular market.
Well, she does drive it like a bulldozer.
We're going to miss you, Sasha. We're going to miss you.
In all fairness, I think the problem here is also a weakening currency and a volatile currency that matters because...
Which weakening currency? You're talking about the rand?
The
or you're
rand,
talking about the
the
currencies
rand.
on the African continent which are also volatile?
I think more the rand, because there are negative perceptions towards South Africa, and I see a continuance of that until we see some sort of economic clarity in South Africa. So I think the currency does play a pretty big risk here, but there are lots of companies that have to deal with those issues. I also, and this is again looking forward, Bruce, the Chinese and the Indian manufacturers in this sort of space can always compete better with us on price. Yeah. And in our environment, an African environment, people are going to be swayed on price and price alone because the quality sort of matters.
Okay, so the quality doesn't matter enough in this on the African continent outside South Africa.
Granted, they sell quality products,
yes.
But this is where I think the Indian and the Chinese manufacturers will grab a bigger share of the African
in 5 or 10 years' time.
Probably even sooner than that.
Okay, so do you accept it or do you shoot it down?
Well, I have to shoot it down.
You have to shoot it down.
I have to.
Okay, because you're playing strategically. Don't take it personally. You understand. All right, final pick for this evening. Sasha Narishkin, your most courageous so far. Famous Brands, the share that is perpetually expensive and never offers decent value, and that's why nobody ever buys it.
Well, actually, the reason why nobody ever buys it is because the tight shareholders, so we're talking Management, Coronation, and Hunts Enderley, own nearly 73% of the business. So whenever those people sell, everyone goes, oh, but in actual fact, they own nearly 3 out of every 4 shares listed. Now, you're right. It trades on a big multiple, but expensive for a reason, because it's quality. So let me just give you these growth rates. So they've got 155 stores outside of our borders, so north of the Limpopo. And that turnover is increasing by 33.3%. And now let me give you an interesting factoid that Kevin Hedwick once told me in these passages here. He said for every unit of GDP growth added, it basically adds doubling to convenience dining. So whereas you and I might not think of this as convenience dining, there are lines outside of the store in KFC when it opens in Nairobi. There are lines, there are queues.
Yes, Famous Brands doesn't own KFC.
I'm just saying. I know they don't own KFC.
And that's one of the greatest weaknesses.
Yum, one of the global...
One of the greatest weaknesses of Famous Brands is that it doesn't own a KFC equivalent. If it had that in its portfolio, I'd be willing to pay 27 times earnings. It doesn't.
So you're
Why must I
saying
pay 27 times?
Germundo's, I mean, that's a recent one. I mean, I personally haven't eaten there as of yet. So you're right, there is a
if you can find a Giramundo's, then you can go and eat there. But you can't find
there's one at the Douglasdale Shopping Centre.
That's in your
You hang out in a Lani neck of the woods.
Okay, Warren, shoot it down. Come on.
I'm not going to.
You're not going to?
I'm glad I took a gamble, and Famous Brands is actually one I hold in my own portfolio now.
But would you buy it at 27 times earnings? At $82 a share, would you add to your portfolio?
I would.
That's such a disappointing way to end the show this evening. So Sasha Narishkin gets accepted. It's a genuine acceptance. It's not one of those
Can I tell
grudging
you why?
acceptances that comes through on Famous Brands. So you don't shoot it down, you accept it.
I accept it, and the reason why is, to me, Famous Brands is diversifying. They're moving away from simple convenience. I think that is a massive growth area for them, but they're getting efficient in terms of their costings.
We have to go. They bought a dairy. Once you go into farming, I get nervous. But hey, that's just me. Okay, so Sasha Narishkin, a quick wrap-up. Tiger Brands, Holdsport and Famous Brands. His first two picks, Tiger and Holdsport, were shot down, but Warren was very pleased that he'd waited and he'd taken a bet on Famous Brands. And this is one of the most spectacular growth stories on the JSE in the last 10 years. Sasha Narishkin is convinced that growth story will continue, courtesy of growth north of its home borders in South Africa. Warren Jeffrey from FSP Invest, Octodec, MMI Holdings and Invicta. MMI and Invicta shot down, and Octodec was accepted by Sasha Narishkin. I've got to now make the really tough call as to who should stay and who should go. Sasha Narishkin is experienced at being booted out. He knows what it's like to be booted into obscurity. However, today, I listened to the arguments being made. I like the long-term Africa focus, the long cues that Sasha likes. I'm looking at the long-term nature of Sasha's portfolio of Tiger Brands, Holdsport and Famous Brands, and I'm giving it preference over Octodec, MMI and Invicta. So I'm afraid for you, Warren Jeffrey from FSP Invest, you're out. Which means, Sasha Narishkin, for the first time in history, you actually survived this game. You get to be invited back with body and mind intact. Congratulations to you. You won Share Shootout. You can go tell your friends and family. That's all we have time for this week. I'll be back next time on CNBC Africa. Remember to catch me on Twitter. Also, give me your Share Shootout suggestions and your thoughts at Bruce Business. That's my Twitter handle. Catch us again next time, and we continue to pick out our winner and shoot down without mercy the rest. Good night.